What's up, YouTube? Listen, family, we back at it. But listen, I need you guys to take some notes on today. Class will be in session. I got two key points that I want you guys to take away from today's video in preparation for next week. So without further ado, keep it locked and let's go ahead and dive into the charts. Okay, guys, as you can see, I have the 1 day chart pulled up here on the SPY. Okay, we're going to jump back into it. Just follow along with me, guys. You need to see what I'm going to illustrate for you all on today in terms of some of the key breakdown areas that I need you guys to be looking out for as we prepare for a shift in the market. So look for March, for instance, to see more downward pressure, meaning around here. Get ready for put seasons or pick six, in which will be taken to the house. Okay, so listen, January and February, seeing the markets go up. This next month and to end out this month, we'll start to see the market come down significantly. So listen to this. The one takeaway is you will see dead cat bounces. Okay, what is a dead cat bounce? That means although we are beginning a new downtrend, there will be days and times, like tomorrow, for instance, the market may bounce up to fake you out, to make you think we're going back higher. Okay, that is your clue to potentially get into something like a put and then ride the stock back down because we are in a downtrend. Now let's go ahead and dive into the charts. All right, check this out, guys. I have the 1 day pulled up. I want to show you a few different breakdowns. If you take our line here and you just come up, you can see we has lost this level and now we are down in this range in terms of where stocks are closing at. Okay, so that's one key area that I want you guys to pay attention to. In addition to that, and let me move this out the way. In addition to that, this line right here is the 200 EMA. Okay, the 200 is one of the most significant indicators on any chart. Okay, and look, we are underneath that in terms of last week's close. Okay, and so that is significant. So not only did we lose our uptrend, we are also below the 200 EMA. So when we talk about resistance now, guys, look at trying to get back to the upside. We will bump into this 200 EMA. Okay, we're going to get friction right there on any bounce up. But also take a look at this. We have now the 13 beginning to curl over. Okay, and if this curls over and this begins to continue to curl over to 48, so right here you got the 13 EMA and then you have the 48 right here. Okay, if that begins to curl over, not only do you have the 200 as resistance, then you have the 13 as resistance, and most likely going to happen is that we'll begin to ride this down until this begins to curl back around. Okay, and so that's why we're trying to tell you and prep you in advance that we have more downward momentum coming. Okay, and with that being said, you guys need to understand that with the downward pressure that is coming, you need to position yourself properly in terms of knowing and understanding where is resistance. Resistance is the top end range of where stocks can go. Okay, so in this example, resistance would be this 399 level. Okay, 400 to be exact. That's what kind of that round number we want to focus on. So when it gets there, that's your clue that okay, we are at a top and we have heavy resistance. We have a lot of bears sitting there to press the stock back down. Okay, if you want to make money when stocks go down, that is a great point for you to enter a put and ride the plays down into these new levels and these new territories in which the market will be entering more so into March, potentially after the Fed meeting and the Fed report comes out and the rate hike is given. Okay, they'll kind of try to line it up with different catalysts so it can look like that was the reason. But guys, around here the money is in the charts, so we trade the charts, and the charts is telling us that we're going down. We just also happen to have macroeconomic data that supports the narrative of a move down. Okay, so again, we had a rally to start the year off in January. It continued into February, but now it is losing steam. Okay, so again, you don't have to be doom and gloom. You should have made a lot of money with me just riding Tesla alone from 101 all the way up to $214, $15. I call all of these levels out. You should have made a lot of money with Nvidia. If you are part of the money team, you should have made a lot of money off of AMD, Apple, things like that. But now that run to the upside will be less strong. They'll still have days and pops. They don't want to have all red days, so you'll get some fluke pump fakes in there. But that's for you to kind of understand, okay, this is a chance for me to get a better entry on riding my play to the downside. I want you guys to be looking like that. I don't want you front running anything though. You still need to let things play out and let the plays develop as they will, versus, oh, I'm just buying a put flat out, and you are buying at the low. Matter of fact, let's go back into the charts real quick. This is what a lot of people do, okay? If we are already at a bottom, check this out. If we are already right here, you are most likely going to get a pop from this level, okay? But unfortunately, a lot of people buy puts right here and then thinking the stock is going to go down when it doesn't work like that. You're going to always go back and retest levels, and before you know it, you'll be buying a put again, listening to the information in the incorrect manner, and then the stock is going back to retest some levels before it starts its eventual downfall. But your put never gets executed properly because you front run it and you bought at the low. Okay, if you are going to buy a put, you want to get it off of this level. I'll call that an entry. You want to get in at this level. I'll call that an entry. You do not want to buy when it's already down here in the dirt. Okay, you want to let some type of pullback occur so that you can get in either here or you can get in here. Okay, that's what you want to kind of shoot for. All right, and so with that being said, guys, stay disciplined. Okay, stay disciplined, and more importantly, remember the importance of following a trading plan. All right, you want to make sure that on your journey you are knowing where you want to get in at, knowing where you want to get out at. You're not just getting into play for the sake of getting in, and you are definitely not holding for the sake of holding, because I'm trying to allude to you today, the stocks will do the opposite of what you think. So although we're going to go down, they may take it up $10, something you don't even expect. And then you like, oh, I thought we was going down. Yeah, but they're not going to give it to you that easy, guys. Everybody would dominate this game if they just gave it to you on a silver platter. They're going to take you up, take you sideways, trick, trap, and frustrate you as much as they can. But if you are not staying disciplined, guys, you're going to get hit every single time. Okay, so I'm trying to illustrate these things for you today so that you guys can see the importance of, we are breaking down. The SPY is now, again, lost its uptrend. It's also under the 200 EMA. Okay, it's also under the 48 EMA as well. And so when you factor those things in, you have to understand the momentum is starting to shift to the downside. So it doesn't mean that we won't, like say for tomorrow, get a fluke pop rally, okay, or just a green day just to kind of throw you off, and then Tuesday, Wednesday, and Thursday they'll let the selling begin, something like that. Again, this is not financial advice. It don't mean it's going to happen in that manner, but I'm trying to put these things in the atmosphere so you can start to see and kind of project how things may play out. Okay, and if they just go straight down, you knew the charts was telling us that was coming anyway. But again, typically they don't do what you think they're going to do in the time you think they're going to do it. That's why you want to have a plan. Remember, this is a game of high-level chess, not checkers. So again, guys, come prepared, come ready to have a plan, but more importantly, execute on your plan. And while you're at it, be sure to manage your risk. Listen, guys, I hope today's lesson was helpful. I hope the charts help to illustrate just a little bit for you what you are seeing on a macro level. That was the one-day chart we used today to show you the bigger picture. I didn't go down in the trenches and the nitty-gritty to show you little moves you can make here and there. I want you to see, regardless of those little moves, the big moves say we are breaking down, okay? And so you can scalp, you can be a sniper, and you can make some twos and fews here and there. But ultimately, guys, whether it begins this week, whether it begins in March, we are going to start trending down. And so I need you in advance to get ready for put season, because we will be taking pick sixes to the house. If that sounds good to you, if that sounds like something you are looking forward to and you are ready to make money with me, please let me know. Please make sure you like and subscribe. If you haven't already, please join the Discord. Link for that is in the description below. Also, don't forget to join our weekly option plays and the money team, because we will be knocking plays out the park this week, okay? Remember, guys, for us, the money is in the charts. The news is just noise. And so, again, when you understand the charts, you can get to the money every day of the week, all right? With that being said, guys, we make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to like, subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.